infrastructure technology provider in the space, and we provide asset digitization and digital asset exchange solutions so that our customers launch new products and services, brokerages, exchanges, and the like. We're 5 years old. We have over 120 people in the company, so we're one of the veterans in the space. So the opportunity for digitizing assets is pretty massive, and I think everybody that's been talking at this conference has talked about what the industry has looked like. What we've seen is that the majority of respondents to a World Economic Forum survey recently said that they believe that 10% of global GDP will be stored on blockchains by the year 2025. That's $7.8 trillion. Also, the Bank of England did a survey that stated if they were to digitize their national currency, it could increase their GDP by 3% or more by reducing friction within the financial services space. So these asset classes that you see here are ones that can benefit from being digitized. And really we see that already happening. The ICO landscape, over $20 billion has been raised for projects across a variety of industries. And what it's taken, the rise of digital assets, what it's taken to get to 1% of GDP in the market cap of all digital currencies and digital assets, that's happened in just a few years. Where other asset classes in recent history, it took decades for assets like REITs or high yield bonds to reach the same percentage. Also the trading marketplace. So a lot of the prices being depressed, but really the trading volumes today are still much, much higher than they were in the past. Today, average trading volumes are in the tens of billions of dollars. A few years ago, it was the tens of millions of dollars. And so what are the key factors we see as being holding back mass adoption? And it's really clear regulations. I think entrepreneurs in the space need clear regulations and guidelines of what's a security token, what's a utility token, what's a commodity token, and the like. And then security and custody, which go in hand. For mass adoption, you can't have retail investors or large financial institutions take a risk that private keys will be stolen. So there's another factor that we believe is holding back mass adoption as well. And that's the need for a way to track and benchmark sector performance. So there's no way to really track how the industry as a whole is doing, or an ability to create derivative products, futures, options, mutual funds, ETFs on top. Really, in short, there's a lack of institutional-grade crypto index products in the market for large asset managers to invest in the space holistically. So a bit of a background, indexes are really just a simple way to benchmark how an industry is performing. So the Dow Jones Industrial Average, the S&P 500, I'm sure everybody here has heard about. There's lots of indexes that just track how the agriculture sector is doing, how the fintech sector is doing, etc. And really what this provides is a snapshot of how the market's doing, as well as an ability to create financial instruments and products on top of that, so you can buy the entire sector. You can buy the agriculture sector and see how it's doing. So today we're excited to announce that we're launching the Alpha Point family of indexes to track the industry as a whole. So we're announcing that we have 2 indexes we'll be launching early next year, the Alpha Point Leaders Index and the Alpha Point Fast Movers Index. So the Leaders Index will follow the top cryptocurrencies by market cap, and the Fast Movers will track them by the trading volume in the last 100 days, the top cryptocurrencies by volume. We're also announcing the Alpha Point Smart Baskets framework. This framework allows us to create tokens that will then track those underlying indexes so that an investor on an Alpha Point exchange, hundreds of exchanges we power globally, can invest in just that one token that actually has the underlying assets inside of it for both the fast movers and the leaders indexes that those are being tracked. So thank you very much.
And we're done there. Excellent. Okay, thanks a lot, Igor. Okay, so next up we have, Eric Piscini, CEO of Citizens Reserve.
Yeah, I have 5 minutes, so I'm rushing the stage. I'm here to tell you the story of a team that actually decided to work not on one blockchain, one chain, but 2. So we are working on supply chain and blockchain. And why we are working on supply chain and blockchain is because of the pictures you see here. Sourcing issues. Hopefully we don't see that today or tomorrow in North Carolina, but we have significant issues like this one. Vaccine traceability, you've seen that a few weeks ago in China where babies were getting the wrong vaccines. Labor issues, many issues in the supply chain across transparency, efficiency, and integration of supply chains. And on the bottom right here are all the fake items. So you can decide to keep those problems around, or you can decide to not have any problem at all. And so today we are announcing Suku, which is a new platform, a new ecosystem, and that ecosystem is a supply chain as a service platform. And the idea is to create an environment where everybody who wants to be part of the supply chain will have a chance in the future. How it works with different layers, different components. The first one is we have trading partners. So we have distributors, retailers, consumers, manufacturers, and so on, who are going to bring their capabilities and their inventory and their orders and their supply chain even into the platform. The first category are the trading partners. The second one are the technology partners. The technology partners we are partnering with are building the platform with us. And I will tell you a little bit more about this, but they are really the foundation from a software point of view, building different components on our platform. The third piece is the platform itself, which is what we are building, and I will tell you more in 20 seconds. The platform itself is actually focusing today on marketplace, B2B marketplace, and track and trace, which are two of the foundations for any supply chain to be very effective and efficient. And then the last piece of the infrastructure that we are building is a Suku token. And the token is, think of it as the glue or the fuel for all those market participants to interact with each other in a lot of different ways. And I will tell you that as well. So again, trading partners, technology partners, a platform, and a token. And so what I want to do now is to give you a little bit of an overview of the platform itself. The platform is based on traditional infrastructure, completely agnostic. We don't really care which infrastructure you can bring as a node. The second layer is a blockchain layer based on one hand, Ethereum public, on the other hand, Quorum, which is a JP Morgan Chase permission platform. And we merged those two into a single platform because we needed, one, a public blockchain, and two, better performance and better privacy and security. That's the second layer. The third layer is what we call the core. And the core is what I mentioned earlier. It's a marketplace and the track and trace capabilities. And the core is going to be open source. The core is the foundation for everybody on the next layer to build the future of supply chain. And the future of supply chain is based on applications. Think of it as inventory management, order management, manufacturing execution systems. That's very boring for a lot of us because it's not blockchain, it's not crypto, but that's very important. And of course, services as well. Here you have an example of the marketplace that we built. We started a year ago. Like Igor, we didn't start yesterday with the white paper. We started a year ago. We have 45 people in the company building this platform. So it's not a new idea, it's something that is running, and we are looking for partnerships to join us. And I want to spend 2 minutes, actually not 2 minutes, 20 seconds exactly, on the tokens, because the token has a utility in many different ways. Of course, you will be able to use the token to pay for transaction fees, but you can also access very special services because of the number of tokens that you hold in your wallet. So you have a premium category, if you want, based on the number of tokens. We are also enabling token holders to vote for the future of the platform. So each token is voting right to represent your idea about what the future of the supply chain will be. So we are here to create the supply chain to the power of blockchain. And so in addition to exposing you to the platform, I'm going to share a piece of news today. We have existing 4 advisors to the company. Matt Rosak from Block. That's cheating. I have 15 more seconds.
You're fine.
Matt Rosak from Block, BTR from Bitrex, Lily Liu from Earn21 and Coinbase, and I keep forgetting Jack Lee from Foxconn. And today I'm happy to announce that Michael Casey, and I don't need to introduce Michael Casey to interview, is joining us as an advisor as well. So we are super happy about that. Thank you.
Super. Thanks a lot, Eric. Okay, and now we have Igor. Yes? No, I'm sorry, I've gone backwards. Yuri.
Yeah.
I'm just like, I don't know, there we go. Yuri, go ahead. From
Hello everybody.
Yuri.
My name is Yuri, and I'm the head of partnerships at Bitfury for the Lightning Network. And how many of you have heard about the Lightning Network already? Okay, so the majority. How many of you have actually used Lightning Network? I don't think there's a single hand. So my day-to-day work is actually building partnerships that close the gap in between people who hear about Lightning and actually use it in their day-to-day life. And as many of you have heard, scalability is a big problem when it comes to layer 1 of major blockchains, be it Bitcoin, Ethereum, or some other of the big ones. They're good for establishing trust, but they're not so good for efficient and scalable transactions and retail that we come to expect from credit card transactions. Like in Bitcoin, it's 10 to 20 minutes, Ethereum could be a few minutes, but the reality is like nobody's going to wait unless they're hardcore enthusiasts or unless the merchant will take some kind of risk of double spend, which is the case sometimes that people do, but it's kind of ridiculous to expect any kind of mainstream adoption in retail for Bitcoin payments if that's the case. And I'm not sure what has happened with the slide there, but Lightning as a protocol has been created by Taj here at MIT, and a couple years ago he published a white paper, but only this March the mainnet version of Lightning Network has been launched in production, and so far I think Lightning is done in this market, in this bear market, Lightning Network is the only thing that is day-to-day growing, I think, compared to every other crypto technology. The number of nodes is growing, the total channel capacity is growing, and just in brief how the network works, it takes 3 very basic components, payment channels that allow for real-time payments in between 2 people or 2 entities, and then takes those payment channels and scales them to a network by using what's called onion routing, where payment channels into different people could also be turned into an anonymous network or a payment network where people can help others route transactions without knowing where the money is being, what's the ultimate destination of that money, which is obviously crucial for privacy concerns. And so with this technology in place, Bitcoin has actually everything needed for mainstream adoption in retail. And right now, the biggest missing elements of the Lightning Network is really the UX. The technology is there, like the number of nodes is growing, the channel capacity is growing, but wallets, payment processing tools, they're all requiring extremely, like not extreme, but like they require deep technical knowledge. And not everyone is willing, like if you're a merchant, you don't really care about like how Lightning works, what are its properties, and how exactly the anonymity is established. You just want to receive your money and maybe once a week get a check deposited to your bank account in fiat. And those are kind of infrastructural hurdles, and a lot of them that are not technical hurdles. They are really regulatory and accounting and taxation hurdles that we're going to discuss today with my peers here. The use cases for Lightning are numerous. The one I'm most excited is micropayments, because unlike with all the other cases here, micropayments is something that could be uniquely done with cryptocurrencies using Lightning, where it's fraction of a penny transaction done at lightning speed that could be done at large scale of the entire internet. That's something that could be uniquely done with this technology and not really possible with like, traditional credit cards. Okay.
All right. If you've had anything else to say, you can. It just seemed to have flipped to us pretty quickly, but you don't have to.
Oh yeah, we'll go on during the presentation.
Okay. Thanks very much, Yuri.
Yes.
Now, our last panelist is Ellis Oden, who is a Chief AI Officer. And so, Ellis, I'm going to start with you because you didn't do a presentation. Just give us a bit of background on what it is that you do.
Yeah, for sure. So we run a number of companies actually, and one of them is a think tank based in Canada that specializes in financial technology, artificial intelligence, and blockchain. And so through the blockchain side of things, we run a lot of the financial crime and financial intelligence aspects for a lot of different blockchain companies, including for a Canadian-based digital currency exchange. And we spent the last 9 months developing their financial crime and blockchain tracing technology. And what we would do from there is monitor all of the customers' transactions. And they have quite a number of customers, so it is quite a busy job, but we ended up being able to trace any type of illicit activity that someone would perform on blockchain. And while you might think that, yeah, you can send money to someone who then sends money to someone else, and they're not really going to know that you were the person who sent money, anyone who's buying digital currencies, you end up going through an exchange, right? And the majority of the exchanges these days have KYC and AML procedures and policies out there. So at whatever point, whether it's the onboard or offboarding process, you're going to end up giving some of your personal data to the exchange. And that's sort of where we would come in, and we partner with all of these exchanges because they provide us with that type of data. So you might be sending funds to someone who's sending funds to someone else, who ends up sending funding to someone in the mafia who's purchasing drugs with that Bitcoin, and we can trace that back to you. And while you might not be the person purchasing drugs or the person directly sending funding to the person purchasing drugs, you're now within that line. So that's some of the work that we do for blockchain and financial crime, and just figuring out who the major players are and who interacts with those types of people. Yeah.
Thanks. So all of these are very disparate sectors of the blockchain industry. So how do we bring it all together? How do we converge, if you like, and talk about critical infrastructure, and how do each of these relate to critical infrastructure? So what we need to think about is the blockchain industry and the cryptocurrency industry as a whole, as one big landscape ecosystem, and look at what we're building together and how all of these pieces fit in, and what the infrastructure is, how each of these contributes to the infrastructure of the ecosystem. So we're building things. I want to start with Yuri, because at the very basic level, you've got the technology. There's been a lot of discussion over the last couple of years about scaling and how we're all going to build on Bitcoin and avoid the bloat and avoid transaction fees and all. And everyone's been saying, well, just wait till layer 2 comes in. And this is where Lightning comes into it. So we have our technology as that bottom. Then we have to build on that. So we have how do we get businesses on and off? How do we get the businesses in? And that's really, I guess, where Igor comes in. And then you have supply chain. Supply chain is an infrastructure issue, whether you're on blockchain or not. And so that's where we have Eric come into it. So that's another element of the infrastructure. And then we have kind of like the traffic cops of the highway that we're building. So we've got how do we comply with tax and accounting issues, and how do we deal with the, well, I don't want to say legal, but how do we keep things on the straight and narrow, so to speak? Because when all of these things work together, you create a holistic thing that is going to work. And when you have regulation poking holes in things, you have a problem. When you have the technology not supporting things, you have a problem. And when you have people not figuring out how to get into how their business can be benefited by blockchain, you have a problem. And at the end of the day, if you don't know what's going on with the money side, you have a problem. So all of these are important aspects of the Bitcoin infrastructure and the blockchain infrastructure. So again, I want to start. I want to start with Yuri. I don't know why I keep doing that. I want to start with Yuri and talk about how you see the implementation of these Lightning tools as being the next crucial step for infrastructure.
Sure. So the promise of Lightning is the scalability, and the basic technology layer is there already. Obviously, there are some kinks to work out on an engineering level, but it's been rapidly fixed. The next layer of innovation will happen at the user experience level, and that's kind of now unanimous in the community that that's really the biggest challenge to overcome, how to hide all those really technical, sometimes philosophical concepts behind the blockchain into very easy to use wallets, because people are not used to think a lot about such a simple thing as paying for a cup of coffee, the proverbial use case. You don't want to know how it really works, it should just work. So a lot of innovation must happen in that space, and that's where we're trying to focus our efforts on hiding the complexity, but for the more advanced users, always have the tools to take more under their control, because that's the fundamental value of this community, like having this ownership of your funds in a deep philosophical sense of ownership. So tools should be versatile enough to be simple, but scalable, its complexity. But also it's other challenge where we look to contribute constructively is the dialogue with regulators, because things like Lightning Network, they're global by design. They cannot really be constrained to a specific sandbox. If one country, say Canada, makes it difficult to operate a Lightning node, people will go to the US, or probably not the US in this case, but some other jurisdiction. The thing is, you can't really control it, and having a healthy and rapid-fire dialogue with regulators that need to learn as much as they need to regulate as well at the same time is crucial for this to work for all parties. And right now that's a big hurdle, because a lot of merchants, a lot of large-scale vendors in e-commerce, they're ready, they're interested in using Lightning, but they are cautious about, like, what does it mean really for me? It comes to the end of the year and like all their tax and audit and all those things. What should I do then?
This is where I actually would want to bring Igor in, because are you finding that the clients that you're dealing with, the businesses that you're dealing with, is scalability an issue for them, and do they understand the potential of second layers and how that is going to impact the way that they can use the technologies?
Absolutely. I mean, I think from a technology perspective, scalability is extremely important. You know, the clearing and settlement time, how fast you can know that the funds have cleared. It's much faster than a bank transfer or a wire transfer, and sometimes ACH taking a day or 3 days. But it's not as fast as a Visa payment, right? So there's a gap there that I think Lightning and technologies like it can close. When I think about convergence in this space, I think about it really as the convergence of the original adopters of Bitcoin and cryptocurrency, and large institutions, corporations, financial institutions, and retail adoption, and the convergence of those two spaces. And I think in the last couple of years, 5 years ago it was all Bitcoin, then Ethereum and these tokens and kind of the crypto communities. Then we moved to blockchain, right? And the blockchain crowd really didn't want to have anything to do with cryptocurrencies. And now we're actually converging where it's basically the same thing again, right? With token sales and digitizing assets, right? There are large major banks, some of which we're working with. They're digitizing real estate. They're digitizing securities. They're putting these assets onto the blockchain. They need the technology, but cryptocurrencies are within that mix. They're within that basket of the technology. There's a need, a desire for the financial institutions, corporations to provide access to the asset class as a whole, right? If you go to your brokerage, unless you're with a very small, niche group, you're not able to have access to purchase, to buy and sell cryptocurrencies, even though more money has been raised via ICOs and token sales, than some major public listed marketplaces, right? I mean, $20 billion is on par with, it's a similar amount to what was raised on the NASDAQ for the space. So we're seeing the two spaces come together. I agree, the technology layer, it'll solve some of the challenges, and the other panelists solve some of the others, right? To get financial institutions to participate in the landscape, you need AML tools, KYC tools, right? It's a necessity. It's a necessity within banking. It's going to be a necessity within the cryptocurrency landscape. You need your SOC 2 reports. You need to be GDPR compliant.
And that's what I wanted Jagrudi to address is, has for example, the accounting and the tax software, even that infrastructure, how well is that keeping up? I'm getting the impression not so much.
Yeah, not as good as they should be. I mean, we have like 2,000 plus probably cryptocurrencies listed on CoinMarketCap at this point.
Mm-hmm.
And IRS, there's probably one or two very concrete things that IRS has come out saying, okay, cryptocurrency is a property. And that's about it. That's the only clarification we have from tax standpoint. From an accounting standpoint, there's literally nothing out there. So companies are not going to stop. I mean, you all still have to do your business, and we are all doing what we have to do. And while we wait on the regulatory bodies to come back and say something, like here's the guideline, here's what you need to do, we using best guidance, using what's current literature saying, using those current case studies, you use best estimate, and you have to record transactions. And
So what can be done about this? What are some of there are some organizations, shall we say, out there. So you've got Coin Center and you've got the Digital Currency Council. You've got all of these, you've got a few different companies or entities that are in talks with regulatory bodies. What needs to happen to make that needle move in order, because it's a big deal. I try to convince my own kids who have micropayments, because my daughter's a streamer and she wants to accept micropayments, but for her the hassle of, well, I don't know how to deal with it once I get past a certain point, never mind accepting the currency, then how do I claim it, because I'm going to have to pay my taxes, and if that's my income, what can we do to make that bridge easier to cross?
Yeah, it's a lot of issues as you kind of go through the entire process. Like, just one of the things I mentioned is just tracking your crypto transactions. I mean, if you have multiple wallets and if you're trading, if you're kind of a day trader on exchanges, how do you gather all that information? I don't want a bunch of Excel files where now someone needs to go back and manually calculate realized gains and losses and then hope that the information is accurate enough. There are softwares that API call directly to wallets and exchanges, and you can get reports. But the question is, we want to make sure the API calls are working correct enough to capture the information the way it is. And I think that's where the question is, when do you get in that process? When your volume of transactions is not as huge that now you have to go back in history and start fixing information. So you want to get on early on. Again, there's not a whole lot of softwares out there that can automate a lot of process. So there's still going to be some manual work that needs to be done. The other challenge we are seeing a lot is, when you're making payments to vendors using Bitcoin or Ethereum or whatever cryptocurrency from your wallets, all I see from an external perspective is a string of alphanumeric digits. I don't know who that payment is going to, right? I mean, from an account, if the financials have to get audited at some point, I'm just going to rely on the company saying that, oh, this is here's the backup and here's the address, the payment went to so and so, and question is did it really go to that?
Yeah, how do we know that coffee that you paid for on the bike trip?
I mean, to her point, it could have changed hand and gone, I don't know, to someone else. Yeah, it's those kind of issues which are presently in discussion but not completely addressed yet.
And I think that's part of the concern that the average user has right now, especially like if we start talking, Ellis, about, did the person 2 transactions ago buy drugs with their cryptocurrency? What kind of responsibility do I, as a crypto trader, have to know, am I going to get dinged for somebody's past transactions?
Yeah, so I'll give you a quick example of something we came across during our work with a client of ours, a digital currency exchange. So we had 3 different customers who came in person. So this exchange offers in-person verification. They offer in-person purchase, sales, trades of digital currency. So if you want to go buy Bitcoin, you can actually go in with cash or a bank draft or a check or something. So there was some fraud that happened, 3 separate occasions with 3 separate people. And so on the back end, we trace everyone's transactions, right? And so for these 3 people who seemed completely unrelated at the time, we found that on the 6th or 7th transaction, those 3 people had pooled all of their digital currencies into one mega wallet. So we were really interested to see who this mega wallet was owned by. So then we traced that one and monitored their transactions. And figured it out and worked with a number of other exchanges, and we monitored when they go into an exchange and make a withdrawal. So we went to the exchange and we looked up their video camera footage and found out who actually was the wallet holder behind this mega wallet that now has a number of millions of dollars worth of fraudulent funds in digital currencies. And we found out that they're actually a major player, part of the mafia, low-level drug dealer. So right away, that was a huge red flag. We are now working with law enforcement to sort of bring them down and recover those funds. It's one of Canada's first sort of blockchain financial recovery processes in court. But then, a couple weeks ago, our main guy was on vacation in Mexico and was shot So he's now dead.
Oh, okay.
Yeah, but so we're able to monitor anyone who was involved in this sort of drug scandal, who their, some of the lower level clients are, who some of the people are that they would then send the funds to higher up, right? So we're now able to trace that and, work with law enforcement and find out, who the big guys are in the mafia. So I think that was a really cool case, sort of unrelated, but also, tying in that, yeah, you might think you're anonymously, sending a couple dollars worth of Bitcoin to someone to buy drugs, and then
I know, right?
boom, we have you now. So
I think somebody from an earlier panel, there was somebody from the FBI and drug enforcement agencies. Cryptocurrencies, and Bitcoin are really a terrible by which
Absolutely.
to participate. You are literally creating a public record for all of time of those transactions, right? And tools like Ellis and her team and others are building in the ecosystem are prevalent. There's a lot of vendors that now that have gone into illicit marketplaces and essentially have mapped out the ecosystem of these deposit and withdrawal addresses to see when this activity occurs, and then certainly on our client exchanges they can then stop a transaction from going out. If it's going to a place like that, or prevent a transaction from actually being credited coming in. And these are the types of tools that are going to be necessary to evolve across all the blockchains. They're prevalent for the big ones, Bitcoin, Ethereum, etc. But for across the entire landscape for large institutions to get comfortable.
And that actually is a great segue into how supply chains can keep the flow of goods and even payment systems really transparent, so that the provenance of whatever it is that you're sending or receiving, and it preserves the integrity of that supply chain. So I think that's a really interesting part of infrastructure, and how blockchain technology can be used in order to maintain something that literally keeps food on the shelves and medicines in the cabinet and all of that. So what is it that where is it that you see?
No, I agree. I think the way I think about supply chain is I'm going to need more of Ego or more of Yuri, more of everybody on stage to actually enable the next generation of supply chain platforms. Because when you think about crypto and blockchain today, most of the use cases that people have in mind is actually consumer-based, right? I'm paying with my wallet and I'm doing something as a consumer. But if you want to go to the next stage, you need better scalability, better performance, you need better regulation, better KYC, you need better onboarding of different people, you need better traceability of those activities. Supply chain is going to be sitting on the top of all of that, and the only way for that to work is for them to get better and for us to execute. But at the end of the day, the outcome is significant. I mean, if you look at the numbers, just in the US, the logistics companies are spending $1.5 trillion a year managing logistics, and a third of the US companies in the US have 10 different supply chains. So it's very inefficient today, and we can definitely improve the efficiency of those supply chains on the foundation of those technologies.
And I think actually, this is another thing, Alice, is AI factors in quite a bit
It
with
does.
supply chain.
I'm not sure I'm going to call Edith after what happened to